Welcome back to another episode of Momentum Movers. I'm Darnell Price. Thank you for being here. In this week's weekend video, we're going to cover the warning signs I see in the NASDAQ market candlestick chart, why I think that big move we've been waiting on is right around the corner. Will we get that the entry on that move this week? Stay tuned to find out. I'll also be covering my own personal trades right here on the TopstepX XFA, where I had a minor setback on the challenge, how I turned that minor setback into a banger $3,500 win for the week. We'll also cover gold and how it's produced many opportunities in the past week or two of trading. Where is it going next week? Stay tuned, like, subscribe, and go ahead and turn that notification bell on so you can catch my midweek and next week's weekend video. All right, let's get roller coaster would be an understatement. I'll go ahead and take a look at everything that led to the $3,500 week, my first week in the XFA, coming in with the 65% win rate. Losers slightly bigger than my winners. However, the profit factor did come in clutch, saving the day, allowing me to go ahead and leave the week with a $3,500 win. You can see the P&L graph. I tried to keep it steady up and to the right. Tried not to have too many home runs. Just basically took base hits. You'll see that as we get further down. Like I say, average winning trade 130, average losing trade 160. But what's important is that we keep that win rate up if we're going to have an inverted risk reward, having and just have more of those winners than losers. I tried to hold on to some trades. As you can see, I had a few that were over 4 hours. Tried to keep those losses short. However, between the 10 minute and 4 hour mark, there were a few losers that I let get away from me. Looking at the calendar, Monday was a heck of a day. It was deep in the red. I reclaimed it. Tried to keep going, took some losses, ended up closing the day with about a $300 loss. That's not a good habit to allow your P&L to go that low. But if you can reclaim it, good. But we don't want to make a habit of getting rewarded for bad behavior. On Tuesday, I pretty much took a little drawdown early on. We went ahead and closed it on a high watermark, especially considering that the previous day was a decent sized loser. The next day, few trades, right? You find the move for the day. I think on this one it was gold. I found the low. I bought in one or two micros. It looked like 2 micros, and then I scaled out. Just find that that was and this is a day I want to try to reproduce, trying to find the extremes of the move and get in. Thursday was a bit of a mulligan. To say the least. I had some run-ins with negative P&L. I think I had a TopstepX issue, candle stop printing. However, even after that, I went ahead, I got in, I reclaimed those losses, cut the day short at break even, and then end up the week Friday again, find that extreme move. I think I had been working in the real world doing move jobs, so early on in the night, this was PM session. When the session first opened, I made a couple hundred. I thought I wasn't gonna trade. I ended up just watching mostly. But then, midday on Friday, we may take a look at that trade. I saw an opportunity to catch a decent short on NASDAQ, got in, and we held it for about another $1,000 to end that day up 1,500 and to end the week up 35 strong. So basically, after this first week, what I've learned is, there were a lot of moves that I saw I did not take. Some of them were A+, some of them were not. However, what was most important and what I found that was able to keep me in the right frame of mind to execute was just, if you miss the move, let it go, right? You'll find another setup. Look at the higher time frame and pinpoint those locations where those moves may happen and set some alarms on TradingView so that you could be ready to take advantage of them. But if I just go ahead and take a look at some of those trades, if we look at my calendar, going into if we look at my charts, if we go to the 1 hour, there were some gold trades in here that I took. I think you can see the executions on the screen. To be honest, right now, looking at it, I couldn't tell you heads or tail what I was thinking when I made them. One, because I don't trade on the hourly time frame. But two, this is, days away, 4 days away. But there's the executions. I think if you watched any of my videos, you knew that I was long bias on gold. So of course I was taking these longs down here. If you see these sales right here, it wasn't getting out of the total position, but more like trying to manage risk. So if you get in pretty heavy and you start taking off, you could go ahead and manage risk so that if you have a stop loss, well, not if, but wherever your stop loss is, you could basically set up a free trade. And as we go up, you start scaling out of those positions. Same thing on NASDAQ futures. I know if I switch to it, we'll probably see the same on the 1 hour. If we get rid of all these drawings, they're really not necessary. But same thing, I think that Friday short was right here where I shorted, and then you scale out when it's moving in your direction. That's pretty much it. What I plan to improve as far as next week, just isolate the things that helped me this week to put a decent cushion in the XFA. While I feel like we may have some extreme moves, if I could temper my expectations and go ahead and just take those base hits, especially pre-market before the market opens, if I could go ahead and build a decent cushion, find out. I know the guys in the Two Real University, they're always, JR, he's always asking me when I get in a position, how much are you willing to lose on this trade? And that's, it's an irritating question, but it's one of the most important, right? When you get in, it's easy to find the part of the structure on the chart that invalidates your trade, but he knows how I am with being degenerate as far as my stops. Sometimes I'll let it go a little bit past my invalidation point to come back, and he'll say, OG man, how much are you willing to risk on this trade? So just keeping that in mind, this week I'd like to improve on that, being a little bit more patient, waiting for that that perfect entry location, and going in with a decent enough size that when it moves in my favor, I could go ahead and scale out and keep a unit or two on for the big move. So yeah, let's go ahead and take a look at the actual markets, and continuing along on why gold was the best opportunity for last week. If we take a look just strictly on the momentum of the week, if you remember my last 1 or 2 videos ago, I talked about how gold was in a daily breakout formation, and it was a possible possible big run up we could have, especially considering the move we've had in the past and we've consolidated. I felt it was opportune time to start back looking for gold longs when we broke outside of the bearish momentum setup. So I think 2 weeks ago we had that Sunday night Monday sell-off. That was the best time to buy. But if we get into last week, let's see if this is Friday, Thursday, Wednesday, Tuesday, Monday. Monday we had this doji candle, and it retested the high of that red day we had the week prior, which was a decent buying opportunity if you look at it on the daily, with the target on futures charts around 27.90. I think that was my upside target, and we went ahead and met all of that. So there were a lot of economic, macroeconomic scenarios that fueled this rally. When you consider the new administration coming in, and how Trump being major as far as having a weak dollar. However, right now we're in an inflationary environment, and markets are at an all-time high. There's a lot of uncertainty baked into the market, so it's not hard to see why you would want to take a risk-off trade and go into a safe haven asset like gold. There's more on that. We can make a whole nother video at a later time on where I see price going in the future. For right now, in the immediate week, I would say that I would not, I would look for this to consolidate in this range between, the midpoint of this red candle and the high we made Friday. Should we break that high and build structure on an intraday time frame, I'll continue looking for longs. But as of right now, I'm looking for more consolidation, sideways action, maybe with a slight bearish. I can't even be that bullish on gold right now, considering what I feel is going to happen in NQ. If we look at just, take away the momentum and just look at the levels, we are firmly trading inside of the channel that we've been in for about a year now. So, retesting the lower end of the center of this channel, the midpoint of last week, finding support and then continuing to move. I could see that if we do want to keep rocketing forward, going to all-time highs. Like I say, if we break Friday's high and build structure, that will definitely be on the table. However, right now I'm looking for more sideways, maybe in the least going into FOMC. We do have a federal rate decision on Wednesday, so most of my trading week I'd like to wrap it up between Sunday on the week's open all the way up until midday Wednesday. I don't think I'll be placing many trades in the back half of the week. If I do, I'll probably buy a new TopStep combine and just work on getting another funded account. But yeah, that's what I see coming as far as the uptrend. The uptrend is still intact. However, just when I think about the size of the move we've already had, I would like to see what happens on a break of Friday's highs, getting back into new all-time highs. I do feel like we will be taking out those all-time highs and putting in some new ones. But just right now, as far as my strategy is concerned, we are at a bit of a resistance. So, we may come back up to Friday's high. We may break a little bit above it, but I don't see us sustaining much above it until we come down and find support for a decent move up. So basically sideways and to the right, maybe a minor bear bias going into next week. And we'll just come back Wednesday and reassess. So on that note, let's switch gears and talk about what I'm really excited for next week about, and that's the potential bearish price action we could see in NASDAQ, right? So basically NASDAQ and gold, on a strictly candle by candle correlation, I feel like they have been like almost to a 1-to-1 correlation, like, a 1.0 correlation, where for every tick by tick, every time NASDAQ goes up, gold is also going up. Where the correlation diverges is the magnitude of that actual up move. So while, when they're going up, while NASDAQ is increasing, gold tends to outperform to the upside. However, on downside moves, NASDAQ tend to outperform. And that leads back into what I was just talking about as far as gold. I could see it going a bit higher. However, I don't really see it breaking out of Friday's high. I see it going sideways, just teetering around back and forth in a range. Because that downside move that I'm expecting overall in the markets, I don't feel that you will see too much of it in gold. However, I feel like you'll see it more exaggerated in NQ, which brings me to my play of what I'm looking for as far as filling this gap that we put in on Wednesday, between Tuesdays and Wednesdays candle. I definitely want to see us get down to it, if not surpass it. Getting down on futures to around the 21,564. I think that's what opens up. If we're down there by Wednesday, we could potentially see I'm not trying to predict or forecast. Just if we're down there before, at this level, maybe a little lower, somewhere around 21,500 when the minutes are released for FOMC. I think that may be the catalyst to get us down, the headline catalyst to get us down to break these lows. I don't feel like this is the lowest that we were going to go for the year, and I think after running these highs on the daily chart, not really cracking the first lower high, but coming right up in it, making relatively equal highs. I don't feel like it's my opinion that high that we put in last week is safe, and that we should be looking for lower prices on NASDAQ to eventually, sometime maybe in the middle of next month, maybe not immediately. It could happen immediately, but getting some deep red candles like we did previous after these up moves, especially considering the fact that we have a gap that's relatively close to fill, and we have, headline risks that are creeping up in the markets that could potentially sour any rally or rally expectations. Just going in and looking at it on the intraday, like if you take a look at an hourly, momentum wise, we are at a point to where, like I say, maybe early on Sunday, in the Sunday session before Asia, we may see some bit of a rally. Me myself, I'll be looking to take positions on shorts around the 21,970 level. That's where I'll be looking to get active. If I could limit risk, anywhere between 22K and 21,970, if I could get an entry with a stop, somewhere above 22,050. That's a trade I'd like to hold for the duration of Sunday night and going into Monday's close. If we're gonna get a sell-off, I think the high would come around that level, and that's where I'll be looking to get active. Those are my entry zones. That's where I put my stop. We'll recap it again when we end this video. But yeah, just when you consider the things going on, as far as I've been getting the impression that some of the executive orders haven't been taken so favorably. We've been under a new administration for what now? This is the first, maybe second week. The budding camaraderie that Elon, Musk, and Donald Trump have shared during all of the election period is coming to a bit of a sour. So I would expect to see charts like Tesla and some of the other AI stocks. This may be the narrative that go ahead and allow them to take a hit on the chin. We may see some potential downside in them, and as they go. So with the NASDAQ, it makes sense to me technically. The narrative is there, so we'll see. If we start taking out Friday's high, last week's high, then I'll reassess. I know exactly where I'm wrong, and what I love about this trade is the place where I'm wrong is very close to where we currently are. So like I said, if we could get into the 21,970 area, and I could put a stop there somewhere above 2250, 22,100 in that general area, Friday's high, I don't mind taking it short. I feel like the risk would be well worth the reward. And should we build structure above Friday's high and continue to look bullish, well, like I say, I don't mind reassessing, and we'll just take it as it comes. But yeah, just going ahead and getting ready to wrap up this video. I really do appreciate you for coming in. We'll go ahead and talk about thank you for coming and spending time with me while I recap these markets and my journey with TopStep. Go ahead, make sure you keep these levels on your charts. Make sure you keep mindful of these gold and NQ levels. And in the comments, let me know, do you think that NASDAQ and indices may be about to sell off? Do you see gold continuing its run? Whatever it may be, let me know. Give me some reasons why. And if you would like to chop it up, come down to 2 Real University. I'll drop a link to the Discord in the description, and let us know. I'd like to give a special thanks to Valletta Beats. His link to, if you like the music, if you enjoyed the music playing in the background in the intro, go ahead and take a look at his link tree. All of his socials are there. And if you make music, if you're in the music industry and you like to collab, he's looking for collaborators. Once again, thanks for joining me on another video from Momentum Movers. I'm Donnell Price. Trade well, trade smart, and trade on.